There we go. Yay.
We're back.
You got to love COVID. I'll just keep saying that. Folks, there will be another Square that joins this once we get through some technical difficulties and we're able to get Wesley on from Varo. But in the meantime, we're going to allow BankMobile and Current to just talk trash about Varo for the next 40 minutes until Wesley shows up, because that's what you get, man. I'm just being honest.
Seems fair.
That's how we roll here. I'm not going to do introductions because we don't need to, man. I mean, you got three of the biggest names when it comes to challenger banks in the U.S., in my opinion. And this is a massive compliment, because I work for a company based out of London who one of our co-founders co-founded Monzo and Starling. Mm-hmm. And the bottom line is y'all are kicking Monzo's ass in the U.S. and no apologies needed for that. And I love seeing the homegrown challenger banks in the U.S. have their moment. And so I'm going to start there for everybody. And you both are nodding, so you both know that I'm right. I'm going to ask, and Luvleen, I'll start with you, because I mean, honestly, you're like the original gangster now when it comes to this. I mean, this is what you have been doing outside of consulting. This has been your life now. What has it been like for BankMobile since, let's go back to the start of this year?
Yeah, I mean, it's been a crazy year for all of us, but I think as all of you know, probably listening, it's been a year where the digital model for banking has just been validated in the most extreme way. And, I think it's obviously accelerated growth for a lot of the digital banking models. And I think it's also changed the competitive landscape, because legacy banks that were maybe taking their time accelerating some of their technology and innovation are probably on the accelerator full speed now. And so it's been a very interesting year for us. We're seeing deposits in our white label business up 300% from last year. And I read the Federal Reserve put out a metric that from January to September, on average, deposits at banks are up about 19%. So 300%, it's validated. The digital model is validated, and we're really excited about the future.
I mean, the two of you got to feel like Noah, right? When it started raining, and he's like, "Man, I've been telling y'all for years that this is coming." It is a Noah moment, Stuart, and obviously it's the same for you, because I'm guessing that when's the last time you shaved that beard? And honestly,
it's been a few years now.
Okay,
but the quarantine didn't help. It got kind of unruly at some stage. If you don't class this as ruly, but things have been good this year. I mean, just to echo some of the previous comments, the validation of analog to digital, and we had how many do we have? 75,000 bank branches in the country, and there were reports going into 2020 saying, look, they're going to cut 25,000. I wouldn't be surprised if people like the big top 10 are cutting up to 50,000 over the next 5 years. And they're going to pull away from areas that are desperately in need, more impoverished areas that Current focuses on in terms of HHI, $25,000 to $75,000 household income. And so the profile is very different to the type of people we bank. Our average age is 27 and up to 50% Black American. People work in essential businesses. And so they've had a tailwind. There's been some stimulus, and we've seen that, but they live paycheck to paycheck. Mostly that is paying down debt, paying down, auto loans, turning on your lights, getting groceries in the refrigerator. So a very different dynamic for our members. But what a year in terms of growth for us. We've managed to service more and more people, 1,300% annualized at some stages of this year. So yeah, been telling people for a long time, and it's nice to see. It's such a bittersweet thing. You don't want to see a global pandemic validate your business model, right? Like that's not what we want. But in the same time, we're able to service people in the time of need. And I think that's been great for myself personally and the team and the broader team at Current.
Yeah, and we've seen that, when and Varo's not here. Wesley will be able to guys having some technical difficulties, but we've seen this with Varo. We've seen this with BankMobile and Vibe. Do I say BankMobile? Or do I say Vibe? Do I say BankMobile Vibe? Do I just say Luvleen? Do you care? Gotta get the brand out there.
Gangster. Yeah. I like the first description in the beginning.
OG, we'll go with that. Okay. But the same with Current, right? It's one that it is a shame that it's taking a global event like what we're going through to prove something that we already knew was right. I'll just flat out say it. if you're watching this and you're sitting and you're still hemming and hawing on brick and mortar as compared to digital, the argument's done. I mean, I will flat out say that. I mean, obviously there is a place in servicing different communities, and it's going to be needed, because I agree with you, Stuart. I think we're going to see, branches closed in areas where people desperately need that relationship.
That's
and
right.
both BankMobile and Varo. Hey, Wesley, nod if you can hear us, Wesley.
Hey.
Oh, I
can hear you, sorry.
Now I got to give Wesley equal time, and we got to talk about charters and things. But we'll get there, Wesley. Just give me a minute. I'm giving you all praise. But we are talking about how COVID has really changed, the argument over whether or not folks really want a digital banking relationship. But Wesley, I'm going to start with you then on this question. What do you think, especially now that we live in a COVID world and in a truly digital world now, what are your customers looking for in that relationship with you from a banking standpoint?
I think customers just want to be able to do everything digitally over the phone, right? And then when they do have to enter out into the physical world to do things like, go into the store to make purchases or withdraw cash, et cetera, they want to reduce the friction as much as possible, right? So, we've looked at things like we raised our daily ATM limit, right? So people could get more cash out. They didn't have to go out as much. Like we're launching Varo Bank, which we launched on October 1st. All of our customers are getting contactless cards. So there's some basic things like that. Yeah. But then that's sort of the interaction with the physical world. But then you also need to be able to deliver sort of a really good experience in the app, so people, they get their money, they get it quickly, they get their benefits early, and I'm sure the others, we all provide that. The others will talk about that as well. It's really, I think, across so many industries, people have been willing to engage in digital experience and digital products, and banking is one of them.
And Luvleen, I'm curious from your standpoint. I mentioned right before we started this, of my 4 kids, 3 are either in college or have wrapped up college, and early on that was a large part of your customer base. But when I think about you servicing them, think about the experience they've had, right? You're only supposed to have one of these global events in your lifetime, and it appears now we're going to do it about every 2 or 3 years is the new norm. But I'm curious what that's like for you, watching your customer base kind of age into a digital product, if you know what I mean. The maturity, what have you seen in the maturity of your customers, right? Maybe acquiring them when they're first going to college and now in the workforce. Has their needs changed at all?
Yeah, and Sam, the luxury of living in a New York City apartment, I'm hearing this drill, so I apologize. It's really loud. Hopefully it's not so loud on your end.
Yeah, you're good.
Good. Yeah, so for our students, I mean, it's been interesting in the sense that we haven't seen that much of a change, except that we're seeing deposits come in much stronger because our digital model has been there from the start, and we've already seen adoption, grow each year in that model. And so, what we've been doing is what are the pain points we're trying to solve for? So one is with more and more deposits coming in, are we making sure that people are able to generate interest on those accounts? And that is really difficult in a low rate environment. And that's why partnerships with T-Mobile, et cetera, where you have a technology company coming with a bank and you can fund these sorts of rewards together. And it's not just the economics of the bank supporting these models. We've found that students feel that we're supporting them with an interest-bearing model as well, as they're flooding these accounts with deposits and trying to save and manage. Similarly, they're coming in at a young age, they're thin credit file, they want to look to support, and they always have, about how do we encourage them to make good financial decisions to help build credit, but then also allow them to access credit. And so over the last year, we've spent a lot of time building the infrastructure for offering personal loans, student refinance, credit cards to our students, and then adding the security aspect that Wesley was talking about, where we have a virtual card. So as soon as they open that account, they can start spending money on day one in a virtual manner, and have the security alongside of that to make sure that they can access and manage and grow their money appropriately.
And Stuart, when I look at Current as an example of that, because initially, we talked about teen cards, right? And just so everyone knows, I started my career in cards and prepaid back when prepaid was a 4-letter word. right? When the Kardashians had a card. Y'all remember that one? $100. Well, we can talk about that later. Yeah, I was in the midst of that wonderful world. And they were considered a thing. And you know, there was a time when the teen card and teen accounts first came out where it had that same type of view in some places, and yet you've proved the model works and you're able to graduate that. So you're seeing the same thing, right? You're seeing a maturing customer base with your product.
Yeah, that's correct. We are a multi-product fintech. So we have a teen checking account as well as a full individual account. We skew a lot younger, like I already mentioned, compared to maybe some of our competitors. And so we see this interesting interplay between the parent, the teen, and a full individual, someone who's obviously growing up and from 18 to sort of 27. And we do have a graduation process as well. Typically 30% of our customers have student loan debt. So that gives you an idea about sort of the type of work that the average or normal member of current is doing, living paycheck to paycheck. And so, you know, the sort of innovation that we've seen important and really to echo some of the points is that, you know, with the Fed putting real interest rates at negative and you're living paycheck to paycheck, you really can't accumulate any wealth. Yeah, exactly. Right. So if you've got stocks and shares and you're affluent, that's great for you. Good for you. Right. Like it's gone up. But for the other third of America, 120 million adults that we try to serve, they really don't have a way of accumulating any wealth. And so we launched our point system about a month ago, 6 weeks ago, and that has been phenomenally successful. And it's getting about 8 to 10% cash back on places that people typically spend on. In a point system, you can cash out even as low as $1. And so that has been phenomenally well received. So if you think about the biggest savings you'd ever have, if you're working at Walmart or Amazon in the warehouse, or you're an Uber driver, is top line discounts. And so that has been our focus. That's what's been one of our main sort of differentiators and talking points for our customers. That and obviously getting the money in as quickly as possible. When you're living on a FICO score sub 650, 670, which is the majority of our customers, you know, they're not able to manage their cash on a credit card like typically many people on this call would do. So you're sort of, you know, trying to make ends meet, trying to balance the book. And the infrastructure, the ACH system and typical banks are not very helpful in doing that. And of course, they really want you to overdraft to get that $35 fee and all those other fees that they do. So and so really tightening that up, having a very clear budgeting insights, software mechanism, plus getting the money in early and cheaply and helping them spend their money more wisely is what we're doing.
If you're listening to this and you're trying to figure out Stuart's accent, everybody, you're screwed because he's lived in Singapore, Sydney, London. I mean, I swear to God, everywhere else. Thank you, Wesley and Luvleen, for making the accent very straightforward for us, which we enjoy. Luvleen, I want to start with you on this question because I'm curious. I've been doing this a long time. You know, we've all been on panels, oh my God, for the past decade talking about this. PFM is something that's pretty interesting, right? PFM could almost be a 4-letter word in the US. It's when we talk about personal financial management and financial health, it didn't get as big of an embrace by consumers as say maybe in the UK, right? Or other parts of the world. But I think with COVID, when we talk about financial health, it's everything right now. I mean, it really is. So the relationship that you have with your customers, I'm assuming this is an area you really want to focus in on.
Yeah, 100%. And we always have, and we're working on continuously innovating and making it stronger and stronger. Because to your point, PFM hasn't had stickiness in the US. The adoption of that has just been, mediocre at best. And so what we're providing to our students is a couple of things. So similar to how Stuart said, helping them manage and budget their money. So being able to automatically save, being able to create categories of saving, being able to see what is available in money to spend based on those goals, being able to get rewarded for good financial behavior. So we have something called the Passport program that every time you do good financial behavior, whether that is setting up a budget, paying a bill on time, being able to just log into your bank account, you get stamps and rewards that really translate into discounts at retailers where you're really spending the most money and getting cash back. And we actually layer in an education component. So when your grades are also improving, you get additional stamps. And we also create a program where every quarter we're helping a student pay off their student debt up to $10,000 as well. And so in all these ways, we're making sure that students know that we're partnering with them to help them manage their money, to be able to understand what are their pain points, helping to educate as well. We have a whole platform called Paradigm Money that is focused on helping them understand in not a boring way, but as engaging as you can make financial education in a very newsworthy way, linking it with what's going on. If you've read Robin Hood Snacks, this similar sort of things. And so, I think that the feedback we're getting is that students get it. They appreciate the partnership, and you're seeing a lot more engagement with our PFM like tools and our passport program.
I can't believe Jack and Nick just got a shout out. God, and Robin Hood Snacks, everybody. Great podcast. Jack and Nick are wonderful people. We like them. Just can't believe they got a shout out. You didn't give my podcast a shout out, but we'll move past that. Hey, Wesley. Hey, Stuart and Luvleen, did you know Wesley, they've got a charter? And hey, Varo. Here's what's interesting about Varo, and when we're talking about the PFM side or financial health, right? Y'all, from day one, you've talked about it. You were going to go down the charter path. When you look at the founder, you got somebody coming out of institutional banking. So what does that mean then when you're looking at product sets, right? I mean, I'm not going to ask the same question you all get asked in every panel, which is how do you move past interchange for revenue? I swear to God, go watch a million other Challenger Bank panels and they'll talk about it, okay? Wesley, what I want to talk though about is the opportunity to start providing other products for your consumers and how that does tie back then into the financial health of them, because all three of you address a market that desperately needs this. You talked about, folks with thin credit files, students, minority communities. So with that in mind, Wesley, how do you move into other product sets? And I'm going to use that word cross-sell, but do it in a way that you're helping your customers out.
Sure. I think, we're focused, like Stuart and Luvleen and their companies on helping people to get ahead with their finances, right? And really serving, everyday Americans who aren't well served by the big banks. For us, what we see with the charter is then we'll have the flexibility to offer a suite of products to serve their needs, right? People need help saving. They need to, be able to earn a decent return on their savings. So it puts us in a position to, bring in deposits, and then as a bank, we can, monetize those deposits, but we can give people a good return on their savings. People need affordable access to credit. Right, they need access. People have a health emergency, and they get in a kind of a death spiral with payday lending. Right, there are very few options that exist. So it puts us in a position, sort of all as one entity through one balance sheet to offer credit products. Right, we can go down the road and we could get into the investment side of investment products. Right, and in addition to a savings account, offer people access to ETFs and things like that. Right, and doing it all with a bank charter as one bank means that we see the entire relationship. We're not having to parcel out the relationship to different sponsor banks, right? And like right now, like a deposit sponsor doesn't want to share the deposit related data for credit decisions that would be used with a credit sponsor, right? Because they don't want to be a credit reporting agency. So then you're kind of like dealing with these silos across your customers. So the charter puts us in a position when the customer calls us and they say, well, I need help with, my credit card or my savings account. Like we see it all, we treat it all as one relationship, where the big banks, because they've been put together through acquisitions, treat those all as silos.
The big banks and acquisitions, which, oh my God, we're going to see more of. That's Sam Maule making a prediction over the next 2 years. We're going to be in M&A freaking heaven. So if you're a banker in that space, congratulations. You're going to be making some money. Stuart, I want to ask you this question because I'm curious. Who do you consider to be your competition? And not including everybody in the screen. Is it the big banks? Is it community banks? Is it other fintechs? Who really are you competing against?
Yeah, that's a really good question. So
Thank you. I wrote it. It was right here.
It's fantastic. I try and answer it correctly. Everyone on this call, we're in our own lanes in some way. We've carved up sort of the market in our own angle to serve the customer. If you think about a big bank, they sort of serve everyone. Their brand serves everyone. They have 2,000 products and services, like you said, grown by acquisition. And so they sort of mean nothing to no one or a little bit to someone. And so that's been the opportunity. So we don't consider, and also their business model is fundamentally different. If your core KPI is accumulating assets and then lending, it's very different if you're trying to bank someone who's paycheck to paycheck. And the Fed is saying that, right? The Fed is saying, hey, don't worry about assets. We got reserves up the wazoo. Go on punt, go into investment and go and do something like that, or do spend focused banking, which is what we are. And so we're sort of banking that third of America that is being sort of overlooked by banks. So they're really, unless they're going to break their business model, they have proven not to be competitors in our space. In the fintech space or the challenger bank space, clearly not the Europeans. Negative gross margin business. I'm sorry about the Monzo thing, but the more money you pour into a business and the more money it loses, isn't going to hang around that long. And of course, we have a different structure and environment here in America in terms of debit interchange and all the rest of it. And in terms of competition, I mean, like we 43% of all our users that come into Current, members that join Current, have never had a bank account before. So who are we competing with? We're competing with cash, prepaid. I know you'd love that. And alternative financial services. So people basically cobble together a sort of horrible and expensive experience between these sort of four vectors. And so we sort of neatly, and this is at the beginning of their financial life, right? 18 to 27, it's somewhere there, depending on the path you take in life. And so we've sort of come along and say, hey, this is a one-stop shop at the center of your financial universe, and it's a fair deal, and we'll look after you. So really competition-wise, I mean, we do I think we're 17% overlay at the top end with Varo and Chime. Meaning sort of 30 to 40 years old, we sort of start to compete. But really, all our growth is in this 18 to 35 level.
Yeah, there's Wesley, at your time when you were at Amex and working on the Bluebird card, there was always that line, which is damn spot on, which is, it's expensive to be poor. And it really costs a ton. And yet, I'm going to ask Luvleen this question. Yep. Wesley's all excited. He unmuted. He really thought I was going there. And that was a curveball. So Luvleen, that question's coming over to you, because I think Stuart framed this up really well, right? Y'all did find lanes, if you will, to some degree of who you're servicing. So Luvleen, who would you say is the competition for BankMobile? And by the way, well done on the T-Mobile partnership. Good. Go ahead and get that out of the way. I thought it was a brilliant move.
Thank you. So, I think that it's a little bit hard for us to categorize our competition. So I look at it in a couple ways. So one is obviously the neobanks. You have all of us creating a digital model with, at the end of the day, we want to create a product that's really solving consumer pain points. And a lot of us have created similar sort of commoditized features, which is early payday 2-day advance. It's automatics, automate your savings, etc. And there's not that much differentiation there, but it's to point out that we're very similar in solving that consumer pain point in the products that we're creating. But then we also have the traditional banks, where the top 4 or 5 banks have, 50% of the assets today. And so we want to build and create market share from the larger banks and compete there. So that's a second bucket. And then you have the third bucket, which is banking as a service, which is helping fintechs and non-banks get into the banking business to help them better attract, engage, and retain their customer base. And in return, we get to take advantage of their entrenched customer bases today and to be able to acquire customers at high volume and at low cost. And, we're all doing it in slightly different ways. And so if you look at where I think our differentiation is, it's really about creating a customized, tailor experience for large players that want to make the investment to do this, whether that's a T-Mobile of the world or other large retailers, et cetera, versus an API-based solution where you have the Synapse or the Cambers of the world, where it's much more, hey, fintech, come and plug into this and create your own banking experience around it. We'll support you a little bit on the compliance side. And for us, it's about, no, come in with us. What is the experience you want to create? What is the VIP solution that really combines, a T-Mobile usage behavior with the banking behavior? And can we create a customer-centric experience that rewards and brings those two data points together, while also providing you all the back office infrastructure from deposit operations, customer care, core processing, fraud management, deposit operations, you name it, and access to the charter, the full end-to-end solution.
And there's one thing I want to say, this comes across a lot. I know when people write articles or thought pieces or opinion pieces or on different panels where y'all aren't on stage, where the industry likes to slam challenger banks is, oh my God, if they only knew how hard banking was. So let's get this out of the way. Stuart, you were working the trading desks at, let me see, Morgan Stanley, Citi, Deutsche Bank, and BNY. Wesley.
Let's try and get rid of Deutsche Bank now.
That German. Yeah,
let's just pretend that didn't work.
We'll
they're not as good
here.
as they used to be.
Yeah, no judgment over here because I can get this out of the way. Luvleen, weren't you at Lehman for a little bit? Okay, so but still, the experience was there, and also at Booz Allen, and you take your pick, and then Wesley at Amex, and if I remember right, you got also big banking experience. So the argument that folks within these challenger banks don't understand what they're getting into or the challenges they're going to face from a regulatory or banking perspective, the technical term for that is bullshit. So you're welcome, everybody. So with that, Wesley, who do you consider your competition for Varo?
It's a big. There's a lot of competition for people's banking relationships. So it actually, I guess, to Stuart's point, like it runs like actually a lot of different sectors, right? You have people moving to us from prepaid cards, right? And then we also have people moving to us from the big banks, right? So, and in between, I would say that for us, the opportunity is going to be regional banks that are don't have the scale and the big tech budgets of the big banks and are struggling to keep up from a technology perspective and offer differentiated value propositions to their customers, and also don't have like a national footprint to offer them. But obviously we're competing with the other challenger banks and everything else in between. I mean, I would say that, like, I guess to Stuart's point, like, I'm less concerned about the Europeans coming in. I'm less concerned about every fintech that says, gosh, we need to offer a bank account now, right? Because I think that to the point about like banking is hard, like you actually need to focus on it. Like if you're going to be somebody's core relationship where they're giving you their paycheck, right? And they're trusting you with their money and they want to be able to get their money and spend their money and save their money and access credit, all those things. That's a hard thing to do. And Luvleen listed all the different things you have to do on the back end to deliver that properly, right? Yeah. So, I think our focus is going to be on, delivering that core relationship. We do think that with the charter, we'll be able to move, continue to move more upmarket into the space of those regional banks and maybe to some of the big banks, or to take some share away from the big banks, and away from the prepaid space where we might have competed as we first started Varo.
You know what? And I want to ask each of you, because I'm curious of this. I consistently say if I am a smaller regional bank or community bank along those lines, I should be terrified of y'all. And I don't know if terrified is the right word. Concerned, paying attention, watching. I'm curious, are they reaching out to you, right? I mean, like Credit Karma, speaking of one of these fintech players, as a checking account now that's offered through MVP Bank, which I had to Google and evidently is in West Virginia. Didn't know that. So I learned something new, right? You've got smaller banks like Sutton. You got like Lincoln Savings on the banking as a service side, Luvleen, that you mentioned. I'm curious if I'm some of these smaller banks, how often are they reaching out to you either for a partnership or to learn from or look for some opportunity? Is that happening? Stuart, I'll start with you. Is that something you're seeing? Or are you just too damn busy growing that beard and getting customers that you can't move down?
Yeah, the beard / growth. I'm just now.
The beard scares them.
Yeah. As you can see, I'm trying to move away from my investment banking roots with this look. It's uninvestable how I used to look. I think I think we have been approached, and in fact we have one or two on our cap table. I mean, it's public domain knowledge, so you could Google that. For them to learn more. I think for them, the smart ones have moved into this sort of white label, almost BankMobile kind of like area to sort of stay competitive. Banking is hard. NIM sucks, and it sucks on purpose. Right? It's part of the Fed's plan to make it suck. And I think regionals, I think there's a broader problem, which of course regionals and small community banks have, that they know that they're kryptonite, and there's that they are not product focused. And you see this all the time from banks. I saw a Citizens thing $600 for a bank account. Why not? Why not offer $700? Why were there? Let's just do $1,000, right? Let's just do $1,000 for a deposit account. And so what you're seeing there is like the old toaster game from the 80s and 90s. And instead of giving someone a product that would increase engagement and solve their problems, they're just throwing money at it. And of course, you get mercenary growth. You get mercenary growth that is not sticky, and you're not solving problems anymore. And I don't think people have a deposit safety of my money problem anymore. And I think that has long gone since 2008, when the Fed said, and the larger government said, hey, all banks are good. They're never going to fail. There's no differentiation. There's no credit risk, right? That's what we said. And it's continued to be that route. And so now it's all product focused. From 2008, it's like, well, solve some problems then. There's no credit risk. Why is there at least just another brand on another thing? And you're all off the same rate. And so what they've done is they're going, well, we'll just offer more money. That's easy, right? Because we're a bank. And so they have terrible growth, terrible quality of growth, and no product focus. And of course, building products in the last 10 years has fundamentally changed. Fundamentally changed. You have to go up against Facebook, Google, Amazon, all the big guys who can hire really good engineers and product managers. And that's the space that you have to be in if you want to win in banking. And I don't think credit unions and regionals, not only have they not worked it out, but also they're just incapable, unfortunately, of competing. So M&As are coming like winter. And we're going to see 4,700 banks this year, and in 10 years it's going to be like 500 banks.
Yeah, I'm doing the T-shirt as we speak. M&A is coming. That would be good. I'm watching the clock, folks, because we only got 5 minutes left. But I got to ask this question. Quick by raise of hands, how many people are in New York right now? There you go. So here's my question, and Luvleen, I'm going to ask you that. Your customer base, one of the things you'll constantly hear with the challenger banks or neobanks, or everyone will call them, is that these are coastal solutions. This is San Francisco. This is New York. Is that true, or is that BS?
It's not the case for us. So right now we're basically, our 2 million student account holders today are across the country, and really reflective of the population density of those different states is reflective of how many customers we have. Majority, so 2/3 of our customers today are about in the Southwest, average is 27, and about 2/3 are actually women, and 2/3 are minorities. So it's similar to some of the stats that Stuart talked about in the beginning. So in no shape or form is what we are creating to be a bi-coastal product. We also have in our student demographic, about 50% of our students go to 4-year traditional schools, and about 50% go to 2-year sort of community colleges. So there are different stages of life, different income levels, education levels, et cetera. And so we have a very diverse base and demand across the board.
Well, the women is really interesting, by the way. Wesley, what about you? What about Varo? Are you seeing growth across the U.S.?
Yeah, it's okay. Across the U.S. It's similar to what Luvleen said. In fact, when we started Varo, we did have some idea of, we're going to get these like tech savvy people in San Francisco and New York. It was completely wrong. So we serve America, and we serve really people. It's across the country, a strong presence of minorities as well, and both in a set of cities around the country, but also people in rural areas as well.
And Stuart, when we started this, you talked about some of the demographics of your user base. I'm already assuming it's across the U.S. I think this is an important question then for all of you, seeing who you service, but I'll start with you, Stuart. So how do you ensure that the products you're building are meeting the needs of that diverse customer base? And what I mean by that is, there was a CEO of a certain bank who said, I'd hire more Black candidates, but there's just not a great talent pool out there. And then the next day issued an apology. I didn't say the name of the bank, everybody, but easy enough to Google. So when in hiring practices and building out your teams, how do you make sure you maintain that diversity?
Yeah, that's a really good question. Tech, and then you combine it with finance, traditionally white male dominated in both. Yeah. Sort of like you put them together and it doesn't help, right? I won't, I won't give you all our stats, but obviously we take that very seriously in terms of hiring diverse members of our team. We are all based in New York, so we're sort of lucky in some way. New York has great diversity, and not just in the tech side, but in minority groups. So we're able to beat all our metrics, beat like Apple, Google, Facebook. Which, by the way, some of those are not hard. If you look at their team members, but we're well above all of them. And you just got to, this year especially, but over the last 4 or 5 years, America is in a social crisis. In my mind, it's a social war in some way, and it's old versus young, race against race, gender versus gender, and so we're seeing social media tear apart each individual box of which, and weirdly enough, if you go into Facebook ad manager, that's how the world in Facebook is organized, and that's how you advertise. And of course, now we're representing those divides, and so it's really important to have a diverse set of views and a diverse set of people in your team, and to grow along with it. You can't just blindly do it. You have to make an active effort, especially in the industries that we're in. And of course, that's easier said than done with COVID-19 makes everything remote. How the hell do you create, if this is permanent remote, you have to create culture and all this other stuff and alignment. Our mission is to improve the financial outcomes of our members. And so that is always at the top of our mind for all of our product decisions. And so everyone is, marching along to that as well. So, yeah.
Yeah, it's interesting. So I'm looking at the boxes and smiling as we talk, because there's 3 white guys and Luvleen. And Luvleen, you got to be so damn used to this, right? When you get on these calls, you're like, oh, fantastic. Here we go again. And yet a younger CEO of a very successful company, right? So how do you make sure that you feel that diversity in your culture at your company?
Yeah, I mean, number one, like what you just said, I think I represent it just in being. Right. I don't even have to, and I think that we obviously attract people that are attracted to work at, a company that is led by a woman, a minority woman, young woman. I check a lot of those boxes myself, just as a representative. But we've formed our team from day one, where it's diversity of, we got veteran bankers to come in, as Wesley said very clearly, you need to understand banking. And we have young technologists and millennials, like I'm an older millennial, but I'm a millennial, bringing them together. And, looking at our leadership team, our head of marketing, our head of compliance, myself, we're all women. So it's about half and half at the leadership team, and it's walk your talk. And, we're doing a great job of combining age, gender, race, and we have fun while we're doing it. And that's the student base that we're representing has that same diversity.
And believe it or not, folks, we're out of time, but I'm going to give Wesley and the team at Varo a shout out. I know Wesley's background. I know what he did at Amex. I know the work he did at Bluebird, and that Dan Schulman and team and yourself really focused in on and addressing those same issues. So every single one of you, thank you for this. Folks, the Challenger Bank thing, I wouldn't even call it a challenger anymore. It is what it is. You best be paying attention. Thank you all for your time, and we'll jump on to the next track.
Thank you. Thank you, Sam. Thanks.